The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We have the Dow Industrials right now up 104. You get the NASDAQ up 33. S&Ps are up 12. Gold contracts up 1090, and that doesn't look bad, but the bottom line is that gold just went from 1237 to 1267.
Yeah.
The dollar index, folks, you talk about volatility. The dollar index started out at 96.80, went up 1,100 ticks, and had given it up 500 ticks. We got good old Mario Draghi is basically giving away money over in Europe. I guess the whole world's giving away money. That's the bottom line.
They're trying to.
Another day, another volatility.
That's for sure.
And of course, we're going to go over to our man, Mr. Kevin Hinks from TD Ameritrade, Thinkorswim. And don't forget, folks, every trading day, 12 to 1 Eastern Standard Time, swim lessons right here at TFNN. You have Kevin, Scott, Cindy, an amazing program. You trade options. You have to listen to this program. Zero commercials in the program, 1 full hour. Kevin Hinks, what's going on?
Good morning, guys.
Morning,
Who's
Kevin.
having a better day, us or Mario Draghi?
I'm telling you, man. You know,
He's firing his bullets, isn't he?
Oh, baby. It's just amazing. Folks, so they went to negative 0.4% rate.
On the deposit rate, right?
On the deposit rate. One of the bigger deals that they did, they weren't buying corporate bonds before. Now they can buy up to 30% of the issuance of corporate bonds. It's just, and the kicker, this is the cool part, I think, is that the banking structure, this is how the banking is going to work now. If you're a retail banker, not a commercial banker, they're trying to put retail money out. So on the retail side, let's say you've already done $100 million on the retail structure, right? They'll allow you to do another $30 million. They'll give you the money for nothing. And if, in fact, you get over that you're doing more than 30%, that they will pay you to do it. So the real question is, you know, what are they going to charge, and are people going to get it, you know, to get the economy going, I guess?
Right. You know, he expanded and extended QE.
Right.
And, you know, it's funny. We talk about trading, right? And we talk about divergence and convergence. Well, you're watching between countries, you're watching divergence of policy.
Yeah.
You're watching policy going in two different directions. So
Oh,
how
this-
do you trade that?
I'm telling you, man, it's so whacked out, Kevin, it's unbelievable because, you know, there's no doubt it makes zero sense that they're going down on rates and we're supposedly going up on rates, but our bonds are going down. So, you know, it's like, oh, man, there's so many turning points here. It's amazing, man.
But here's the real question, Tom. This isn't necessarily that great for the U.S. economy, right? The Eurozone is basically making their goods and services less expensive at the expense of all the other countries.
Right.
So, I mean, eventually that's going to, you know, it doesn't necessarily do this country any good for them to be doing that.
They're all battling for
you know,
a piece of the same pie because
They
it's
are.
one world economy, right?
They are.
For sure.
Yeah.
Right. So listen, everyone's got to take care of their own economy. I get it. Right. But I'm just not sure why the U.S. is our markets are so happy that they're doing that because, 27 of 30, it's going to affect our dollar. 27 of 30 Dow stocks do better with a lower dollar. And our dollar has to rally if they keep doing this. Although he did say, and that's why these markets backed off a little bit, he doesn't anticipate any further rate cuts. So we'll see if he holds to that. Very interesting. It's fascinating.
It is.
It is, man.
Yeah.
It really is. It's like
They're all over the board, right? It's everything is, man, this is one big economy.
And that's the way, folks, that you have to think of it. And if you think of it that way, I think we'll come to conclusions easier. Right now, I absolutely agree. My head's spinning because I think I was short bonds anyway. And I'm saying to myself, this is crazy, man, because I know that, fundamentally, on a textbook case, that would make no sense that bonds did go down today.
Yes.
Bonds should have went to the moon.
Right.
You know what I mean? Because it's like, hold it. rates shouldn't be going up or staying flat in the U.S.
Yeah.
They just went down. So
Right. Just from a trading perspective, right? If you can, sell their. I mean, it's a trade. It's
Oh, it's a trade. No, exactly. Right.
Country.
But
It gives you a headache thinking about it.
oh, well, you should have seen me standing in front of the terminal when this is coming out, man, because I'm sitting there with my Thinkorswim platform and I'm saying to myself, okay, man, how wild are you going to get here?
Yeah. Right. Buckle up.
Buckle up. You got it, man. You got it. So, hey, what are we talking about today in swim lessons?
Today, it's a little bit of an intermediate to advanced talk. It's the strangle straddle swap.
Okay.
We're going to talk about trading things against other things. You know what I mean? Relationships.
Nice.
Which I love to always talk about. Always a good discussion.
Yeah, big time. Big time. And, in markets... Oh, sorry, go ahead.
Got a lot to talk about in the world.
Oh, it's huge, man. And the swings are huge.
Yeah.
The swings in these marketplaces, folks, okay? I'm not professing that you guys want to day trade, especially, in the option market, but guess what? The last this type of volatility from swing to swing, when the S&P goes from 20 points up to 20 points down, there's a lot of different opportunities out
And you
there.
look at
Man.
like oil just went from 27 to 38. Gold just had $30 in the last hour and a half, 2 hours.
Right.
Yeah.
Right. Amazing.
They're moving.
They're moving, baby.
And that's a beautiful thing.
It is a beautiful thing. Well, listen, we look forward to the show at noon, Kevin. Thank you so much.
Have a great day, guys.
You too. Stay right there, folks. Tommy and I are coming right back. We have the Dow right now up 77. Nasdaq's up 25. S&Ps are up 9. We have gold up 10. You get, where are you? Bonds, 10 years down 5 ticks. Gonna be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow up 89, Nasdaq up 29, S&Ps are up 11. We have gold up 850, silver's up 23 cents. Silver's finally catching a bid. We'll take a look at that.
Everything's moving, right?
Everything's moving, man.
I'm surprised oil's only moved 50 cents one way or the other with all the action that's been happening.
No doubt.
With gold and...
No. All right, listen, the gold move. So let's go over, and folks, if you haven't, test drove the Nadex platform, as I say each and every day, it's a great time to test drive it.
And if you want to trade for some volatility, right, with defined risk, that ties into it too, with those types of trading
opportunities.
Right, right.
And it's the defined risk aspect that you really want to wrap your head around. You're only putting up so much money. You know you only can lose that much money. Come over to our website. You can bring up the exchange. You can put, they'll put $25,000 of paper money into your account. So you can see how these contracts trade. Now, this morning, it's always good being...
It's quite a chart of the gold, right?
It's quite a chart of the gold. And in the gold contract, this thing went down fast and furious. And that's right. Oh, natural gas is coming up too.
It is.
That's awesome. Okay. So bottom line is that, whether you're trading gold in the equity market and the futures market, I happen to really like trading in the Nadex platform spreads for gold and for oil. And the reason being is, and you'll see it right here, I let this baby get croaked this morning. Okay, as it gets croaked, you had a defined risk trade. So instead of putting up $5,000 a contract, bottom line, I bought 5 contracts. I think I bought them at 37. No, I bought them at 43 or something. I went maybe 45. I already sold one.
Yeah, I just wanted to put in.
Yeah.
So yeah, you were risking. You got them at like 12.43, maybe you were saying. So the spread goes from 12.25 to 12.75.
Yeah, it's still there. We can see what I bought it at, right? Yeah, 12.43.
12.43.
Okay. Right.
So that's perfect. This is, so people can see it real easy. You just put in one contract. So
right.
For each one, since you were basically $18.30 above the bottom of the floor,
yep.
you're risking 183 with a max profit of 317. It's $500 because it's $50 in the spread.
Exactly.
So that's like a perfect spot that you really like, right? Where you're not paying much premium, as in the market was you were probably paying a few dollars in premium away from where the...
It was only $1.
Well, $1. Okay, nice.
It was $1. And folks, what happens is it's $1,000. It's $100 a
right.
point.
$250 on each side would be like you'd be right at market. So because you're risking less, you're getting a better risk reward, you're going to be paying a slight premium for that. But yeah, that's and
the kicker is this is the
just
kicker.
To put it on the graph, the chart, 1243 is like right here, so that is a great trade, man.
Right,
for sure.
And the key, folks, is not how much you think you can make. My key, if you're trading these contracts, is how much you can lose.
Yeah,
you know what I mean?
Right?
Because inside
it's
the gold,
both sides too. But
no, it is.
Having that contained, I know that's one of the best things you like, right?
It is. Yeah. Just because what happens inside the gold contract, gold can get on another $50 in a heartbeat.
Well, I mean, you should know that because it just jumped $30 in a heartbeat,
exactly.
Right? So that's for sure. Yeah.
Exactly.
It could have jumped $30 the other way in a heartbeat for sure as well.
There is no doubt. And the bottom line, I'll show you when, why I was doing it. Okay.
Okay. Good.
When we look at the last night, if you listen to the program last night, what we had is that you had the XAU, the HUI. I don't get the volumes until 8 o'clock at night in the XAU and the HUI. In both cases, the downdraft yesterday came back into strength with dramatically lighter volume. I says, okay, so that's cool. I knew that was happening. Okay, so the XAU had come down with 49 million shares. You're going into 82 million shares as well as 59 million. So I says, okay, that's a normal deal. The HUI was a better characteristic.
Okay.
The gold contract, what we did with gold yesterday is that gold comes down, H6. Gold comes down, put the volume up here. So when gold come down yesterday, gold come down hard. I mean, it went from 1265 to 1243, end up rejecting that and going all the way back up to 1257.
Yes.
So that's on 223,000 contracts. Well, we were going into 274,000 contracts, 341,000,
It's pretty, and we've already done 200,000 today.
That's right. And what you're going to have here now check this out. This is really bizarre. It's not breaking a swing point. Now you're pushing highs on volume. Now, okay, so you put that together, and then the aspect when Draghi came out and said that they're going to get more negative, it just made, so that's the technical sense. The fundamental sense was like, oh my God, hard assets are going to be worth money.
Sure.
Because no one wants cash. There's going to be a tax on cash everywhere. So if you have a house, you got to pay your property taxes. But guess what? You don't have to pay a tax every month to put money in the bank.
Store that value.
Exactly.
Yeah.
Exactly.
Sure.
Crazy, right?
Yeah.
You're living in a crazy world, man.
People would say paying 20%, right, for 30 years and working every day to make. You know what I'm saying?
When I started, right?
To pay 20% to buy a house.
It was 14%.
And get tied to a 30-year.
That's even crazier.
Yeah, that's. I mean. If you jacked rates up to 14% overnight, and then all of a sudden our generation was like, okay, this is what a house costs for a payment.
People would be in shock.
Yeah, you'd say, you guys are crazy.
Unreal.
Yeah.
Let's go to our man Carlos. Carlos, what's happening, brother?
Good morning, Tom. Good morning, Tommy. How are you guys?
How you doing? It's bright and early in sunny California, right?
Yes, sunny California. We're going to get rain over the weekend.
Okay.
Nice.
Yeah,
Well, that'll be good.
right?
That'll keep all that dust down for you when you're looking over those mountains.
Oh, yes.
Water's always good out there in
snow,
California.
We need water.
Yeah,
Yes.
for sure.
Tom, first of all, I want to thank you for all of your opinions about the market. It really helped me. And but I have a situation. I always like to separate some money and buy stocks that are undervalued
Okay.
at different levels.
Sure.
And years back, I bought EQIX.
Okay.
Exmog. That stock was 15 cents per share.
15 cents, and it's $300 now?
Yeah, they had a reversal split when I was very inexpensive,
Okay.
and I've been selling that through the years because I bought that one in the collapse of the technology. The year 2002, 2003.
Man, I'm gonna move out. I'm moving out there. You guys, you're gonna give us a couple lessons, Carlos, man.
No. I didn't know, Tom. The reason I have made so many mistakes. I bought Nextel, and it went bankrupt. I think it was another company from Canada that I put some money, and it was wiped off. But I got a group of 5 that I want to get that one completely off. My last number of shares is 100, and I think the market is not giving me much room because I'm not expecting to make any more money on that one. But I want to ask you if your opinion is.
Yeah, just stay right there. Here,
now.
we'll take a quick break. Pretty amazing.
Thank you.
Our phone number, folks, is 877-927-6648. We have the Dow up 57, Nasdaq's up 22, S&Ps are up 8. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Oh, here's natural gas, too. Let's take a look. So, Dow right now is up 37, Nasdaq's up 17, S&Ps are up 5.
I was going to pull up that natural gas.
We get Carlos. We're going to be talking about EQIX, but let's just get these natural gas numbers. The natural gas did get a little bid yesterday. See what we got going on here. Be fun if natural gas starts moving. Oh my God, that's sick.
No bid there, right?
No bid there. So natural gas just went from 179 to 176.
Yeah, it's at 177. That'll bounce around. The same thing we saw with oil, right?
It will. It will. Yeah. So we're talking with Carlos. Carlos, EQIX, right?
Yes.
So is your question, do you want to hold this or sell it? Is that what we're talking?
No. Like I said, I already have make my money, and since I looked the market, that it seems like I don't have much room for that to keep going higher.
Right.
Well, I was going to keep that for a longer time. Sometimes I think, for my daughters or for my.
Okay, cool. Yeah, I get that.
But that's the one I have ever owned that makes the most money. I have made the most money, and I'm short today. I short last night, and I need to reward me in a way, but I don't know if that's the right procedure based on this stock. I don't want to take any profits right now in my short, and I want to sell something to reward me. But I don't know, it's maybe silly.
Well, okay, so now this is where you have a huge tax implication here. So, you don't want to just sell something like this when, if you bought it at 15 cents, you're going to pay you're going to pay 20% capital gains.
A lot of taxes for sure.
Yeah. And it was a reversal split a long time ago when I bought it.
Yeah.
We were coming out from the crash, and they reversal it, and I have 50,000 shares, and they cut down to I think it was 10 or I don't remember how many shares they give me, but a lot less.
You're too funny.
and I've been selling those. I took my money of $5 and I just let the other ones run. And
well, let them run, man. Don't if this is not okay. There's a couple different questions inside of this. Okay.
Okay.
What and the biggest one is the tax implication. Really, do you know what I mean? Because you can't. What you don't want to do is when you have huge capital gains.
Yeah.
And you're day trading simultaneously. You have to be very careful about what you want to take off, because what you don't want to do is come December 31st and all of a sudden, man, you know, you're going to come up with another 30 or 40 grand. If you don't have to. I mean, do you know what I'm saying? So, so you got to think that part of it through. You know, because what I do with that, I look at it, I say, okay, if I take a 20% hit here, what's that 20% hit? And then what's my tax implication? And when you do that, that's just a money management tool, but it's important because that's all that matters is what are you going to pay on it? And so the pay aspect is, do you want to take the pullback or do you want to pay the government?
Yeah. It's really true. And I'm not afraid of paying my taxes, but at the same time, it's a good advice or good idea because sometimes I end up cutting something just because I get either scared or I think the market is not doing what I'm expecting and I just get out.
No, that's okay too. Listen, and I've done that. I don't care about paying tax either, and I've done that. I've cleaned off and saying, I don't care, man. I'm going to pay it because I got to sleep. Do you know what I mean? But it has to do with where do you think a pullback might be, and you know just what difference will it make in your life at that particular point? Do you know what I'm saying?
Yes, yes.
So
well, I'm going to let it run. So.
Let it run. Find something else to make some money on. Yeah, the market just bounced all the way down. Now you can cover your shot and go long. You're going long on a day trip.
Okay.
Make some money there, man.
Thank you very much.
Okay.
Thank you for your time.
Have a great one.
Take care,
man.
Carlos.
Look.
Yeah, so I was just jumping around, checking out what the market was doing as you guys are doing it, and I know that's some volatility for sure, right?
Is that the?
This is the Nasdaq 100.
The Nasdaq one. Look at that, man. This is beautiful, man. This is what a trader's paradise, man. This is crazy.
And then we'll jump around. That's natural gas.
That's natural gas. Look at natural gas.
All the way down to 174 from 179. 5 penny move.
Right.
That's a monster. And then gold is still hanging out at the tops.
And you know what's amazing here, folks? This market. This is what's so crazy. Now the market just gave it up. But my point is, I think the market still wants to go up, and it has to do with these bonds, man, because the bond market, folks, should be selling off extraordinaire, and it's not. Well, it is selling off. It's going down, meaning that and yields are going up, which absolutely makes zero sense. But when this was happening last week, Tom, I was thinking that is this going to be a market that the market's going to freak because even though the rates should be going down, that the market is already selling off and bonds and rates are really going up.
Yeah. Because
that would blow people's minds. But that's not the gold contracts, saying that no, rates aren't going up. And the dollar certainly isn't. The dollar's had a movement of 1,200 ticks out here today. It's amazing, man. Let's bring up this S&P. This is going to get fun.
Yeah, it's quite a run.
Yeah, it's a huge run. Okay, ES, we're on M's. We just flipped. Okay, so it's given up everything. You're coming into, is that 1978? You're coming into 10:50 yesterday morning. I mean, how many minutes we got left in this thing? You're at 37.
37 past the hour.
Yeah, so you're 7 minutes into this bar, and it would have to do more than 32,000. Right now, you're at 21,000. So that looks to me, I'll go over the NQs. That looks to me like NQH6. Like this thing would hold. Let me just put this up. So if we look at the NQs to what we have inside the NQs. Okay, so the first leg down, that's 21,000 contracts. You're 7 minutes into it. We've done 13,000, and we're at 42.87. So 42.81. We have 13,000 from 10.50 yesterday. This is going to get tired right now because goes down. It's going to be hard to break this one, even though it's the same level. So what that would mean is that, to me, what it would mean is you could buy this here and buy it for a bounce. And that's where, folks, also, that's where the Nadex spreads come in, beyond belief. You know, because you can do those on the 2 or 3 hour ones, too.
Yeah. And you're kind of trading volatility a little bit there, too, because you're paying premium for a move that you expect is going to be greater than what the market is implying. You should pay for that premium.
Yeah. No, totally. Totally. You stay right there, folks. Tommy and I are coming right back. Dow right now is down 12. Nasdaq's off 7. S&Ps are down 1. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're going to start calling this the Volatility Hour.
Nice. I like
right?
it.
I mean, it's
How
awesome,
can I argue
man.
against that, for sure?
It's just amazing. I mean, you talk about swings. You know,
We just turned on the show, though. The Dow's up 2 points. Isn't that flat? Right?
Right. No doubt, you
Yeah.
know. And if you go right from when Draghi started, folks, well, before he started, you had the Dow futures up 60. Once he announced it was up 140. Before he ended, it was only up 60.
That's awesome.
If you want to see a move, check this out. This is pretty amazing. Yeah, currency moves do this. That's what our Tiger Duffy's talking about. There's no doubt. Now watch this. This is amazing. DXH6. This is the dollar move out here this morning. So we started out at 97.33. He talked, it went up to 98.43 and then just crashed from 98.43 down to 96.27.
Up $1, down $2.
Oh my God. Amazing.
Yeah.
Really is.
It is.
And look, this is, you're talking 35,000 contracts. August 24th is game on the way down, which is just a mind blower because it's like, man, oh man. We're going to be trying to figure out these fundamental correlations for a bit. And yeah, all our heads, I think, are going to be spinning around.
Yes. There's a lot of variables coming into play.
There are.
Yeah.
And you know what's so cool? These haven't happened in the history of economics in the United States.
We say these haven't happened.
Negative rates, well, actually, in the world, too. Do you know what I mean? Negative rates going in, I said, okay, what are the implications of a negative rate?
Yes.
The first time I heard about it, I said, what are you talking about negative rates?
Yes.
How are you going to charge someone to put money in the bank?
Yeah.
Now it's got even more intense than that. It's,
Yes. Yeah, for sure.
And what is exactly? The thing that's a mind blow to me is that if they say they want money out into the economy, it would seem that there's a lot easier way to put money out into the economy versus just making rates negative. Just build a whole bunch of structures. If they're looking to get everything going, it's like they're still depending on banks to lend money to people, and they're trying to entice everyone to do it. I guess that's the disconnect in between the banking structure and social structures in general. Because if you want everyone to work, guess what? Okay, here's $10 billion. Let's go build some bridges. We need bridges built. We need, and
That's a big conversation to have, though, as you go.
oh, it is. I know.
That takes $10 billion. I'm just, as opposed to negative interest rates.
Right.
That's two different. But you did one alternative there takes $10 billion. The other one.
Yeah, I see.
Doesn't.
So the key is how do you pay it back, right?
Well, one takes $10 billion. The other one takes no money. I mean, that's almost.
Yeah, that's right. No, it's no money because they're printing the money.
Right.
What they're doing is they're putting out 80.
It's monetary policy versus social spending.
Right.
As the conversation at least gets framed. So that's.
No doubt, because it went from they were buying 60 billion, now they upped that to 80 billion.
Okay.
And then they had put a restriction on themselves. They had put a restriction on themselves that they would only buy 30% of the float. And they got rid of that restriction. They said, no, now we're buying 50% of the float.
Yeah. Rules change, right? That's what happens.
Rules change when you're the king.
Listen, yeah. And
right.
we're the king of it, too.
Yeah.
We started that game almost.
Oh, no, for sure. Oh,
yeah.
Listen, there's no doubt, man. There's no doubt, Let's go and take a look at some of these gold equities, because you got, if we go look at Great Panther first, real key is going to be, can we get the volume going? So, well, we might. You get 349,000, it needs like 1 million. It's not bad, an hour.
It's quite a move.
It is quite a move. The silver, that's what we want to look at. Oh, and then we'll go back to gas. See if gas is getting ready. So, SIK 6. Okay, so silver caught a bid. We have 47,000 contracts, which is good. That means silver will end up doing, maybe 65,000 contracts. It's going to need more. It's going to need some follow through. We haven't had yet with that baby is follow through. It's going to need some follow through. The GLD. Oh, this is big volume. Look at this. We're an hour into the market, we've already done 7 million. The last high up here had 16. This is good.
Yes.
There's some real action here, man. Real action is coming in this market. Look. Yeah, let's go to.
So there's gold first, right?
Yeah.
And then we'll take a look at natural gas.
Yeah. Because I got a feeling I want to start trading natural gas. I think it's close, man. I think it's getting close.
Trading it to the upside?
Yeah.
Okay.
Didn't you see my horns?
Yeah, hey, look at 174.
Okay, so now this is, what's cool here? This is where you can start buying. Well, I know, I got to pull it up first. But just the correlation, now you know what the volume characteristic is both ways. You went down, you went back up. Now what you'd be looking for is coming back down and coming back down into those levels with lighter volume. And because you got a range setup.
Yes.
And a range setup in natural gas, folks, is insane. Well, what I mean by that is that if you thought that gold and oil can move when natural gas moves, man, you definitely, natural gas inside the futures market is $10,000 a point.
Okay.
It's like you don't want to be trading natural gas inside, the futures. You do.
No, I hear that's a big move.
Yeah.
Yeah.
When you're right, Dave from Clearwater, you buy your wife a brand new Escalade. When you're wrong, she throws you out.
Escalade, nice. Where'd you get that one from?
He bought it.
Oh, that's what he did?
That's a true story. Yeah, he did.
Okay.
He bought
I was
an
just like,
Escalade.
where'd you choose that guy from?
Yeah,
Okay,
exactly.
And then this is oil at the same time. So that's just kind of bouncing around down here.
Yeah.
The same way gold is still bouncing around
Right.
at the upper
Right.
levels. That's a minute chart on natural gas. which
Is it?
nice.
Oh,
I mean,
cool. Okay.
I mean, that's just huge moves within a minute span. Going
Yep.
2 pennies down, 1 penny up. Maybe let's look at some of the gold miners. You were pulling them up during the break even.
Yes. If we go over, we take a look at Gold Corp. Now the production, and Gold Corp.
Yeah, we just saw headlines coming across,
Yeah,
right?
huge headlines, man. So
Only the
check.
second time ever that they'll have a production decrease in 2016.
Is it?
Yeah, second production decline ever in 2016.
Right,
But
and
they
it's going up. I mean, the stock's going up.
Right, right.
Gold Corp has increased its gold production 46% since 2012 to 3.5 million ounces a year. This has helped the company combat 30% drop in the metal's price. Gold Corp forecasts mine production in 2016 is going to fall 20%. Only the second decline in its history as it seeks to cut cost. The company expects its largest producer mine. See, what's happening here, and this is what's going to be dangerous, and you really do want to dig into some of these, is that when the gold cost was so low, cost was so low, all miners went and, let's picture we have a backyard. And in one corner of the backyard, we have really cheap gold that we can get really quick.
Sure.
And in the other corner, it's harder. Well, when the price gets so low, you got to go for the easy stuff so you can get more of it out.
Sure.
So your company doesn't, then that's what...
Yeah, we'll go into it. No, I'm sure,
Yeah.
right? They need to cut costs. That's what they're saying.
Exactly.
So they need to produce a little bit less gold.
Right. You stay right there, folks. Tommy and I come right back. Market is flat out here. Gold continues to be higher. We're up 860. We're going to be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Great TMDs.
Yeah. Welcome back, folks. And the 10-year note, the 30-year bond, folks, the 10-year note doing an ABC down. We've already done almost a million contracts. So bottom line is that, yeah, they've put rates down in Europe, but guess what? Market's bringing them up.
And just to finish it quickly, it's just they're going to be cutting costs, and that's what, because we should get back to what you were just talking about too. But for Goldcorp, they're cutting costs, right? And that's what they said, that they're trying to guide. They're basically all in sustaining cash costs, as they call it. They have it to like 893, which is their lowest level since 2012. So they've been doing a good job anyway of cutting costs, but they're going to try and guide it down to between 850 and 925, and they're going to cut their capital spending by 35% to $850 million from $1.3 billion in 2015. So they're cutting costs, they're cutting capital, they're going after higher quality gold reserves to cut their costs.
Right.
And the market obviously likes that.
Yeah. That's what it likes. Okay, I got it. Cool. Yeah. No, that's what it is. Yeah.
So let's look at the rates, though. Pull that up.
Yeah, these rates. So Draghi goes down across Europe, and if you're looking at the screen, what you're going to see is all the rates have actually gone up.
Yeah. So the price they're trading at goes down. Of course, the yield is up.
Right.
And that's so the rates are going up. Yeah.
And it's possible. I saw it's one of the targets in the den saying, well, the market evidently is saying that how much further down can they go, and maybe that's the case. Maybe there's nothing else to throw at it. He's throwing the bar tub at it. He's throwing everything else at it.
Yeah. And you were saying, could you fathom negative interest rates? And I was saying, why not? Almost, right?
I know. And I'm looking at him like, what are you talking about? No, seriously, because this is pretty cool.
But you got to think about it. I mean, you're not getting an interest rate right now practically anyway.
And we actually, between...
Yeah, I was saying, how often do you go to non-ATMs that you get billed you $3.50, then you get billed you $2, so it's $5 per an ATM.
Right.
Takes a lot of cash in the bank to be getting $5, $10, $15, $20, $100 in interest.
No. So we're paying negative interest rates right now.
Yeah, and you're paying it because they're storing, up to whatever those limits are.
Right.
So my question to you is why not? Not how could you how could you even accept that? My question, isn't that a service that they're providing? It is.
No,
we're pretty close to that. It's not unfathomable, at least. I understand your context where like money's used to you're loaning them that money, but you're loaning it.
Guess what? I bet if I look at my account, I'm probably paying them.
I know how ATM fees don't faze you.
Yeah.
So that was kind of my cynical remark at the break, where you were like, I can't fathom paying the bank to do that.
Right.
Meanwhile, you'll run out right after this show, go hit the ATM and go to lunch, and just
Sick.
And all we talk about is you can't fathom paying the bank for that service.
I know. Let's go to Steve in Nashville. Hey, Steve, what's going on, brother?
Hey, Tom and Tommy, the Dunkin' Donuts are good today.
Hey, Steve.
Hey, listen to this. This was top-line news in South Boston yesterday, okay? At Perkins Square, folks, okay? Perkins Square, this is an old smoke shop. It used to be an old bookie joint, right? They're taking that down. They got a Dunkin' Donuts beside it. Well, everyone's going crazy because the Dunkin' Donuts is coming down. If you go to South Boston, it's hilarious. The South Boston, Facebook page and all that, right? So they get a beautiful picture of this building, but the news wasn't the building. The news was taking the Dunkin' Donuts down.
Nice.
Isn't that wild?
You mentioned GPL, silver in general, but I was looking at a monthly GPL and looking back at July of 2014.
Yeah.
As the swing point, swing high, right?
Yes.
Conceivable, not likely it'll go there, but who knows, right?
Listen, man, I own GPL. I'm going on GPL. I'm going after 350. I'm going for the swing point of March of 2011,
Gotcha.
Man. This is a high volume swing point, man.
Yeah, plus the MECD just turned up on a monthly.
Let's make some money, honey.
Yep.
Thanks,
Talk to you
Steve.
later. Thanks.
Stay right there, folks. Basil's coming up next. Swim lessons. Thanks, Bill.
Thanks, man.
Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.